I'm Andrew Moran, Liberty Nation's economics editor.
Very, very rocky.
Death by government.
Drain the swamp.
Hello and welcome to another installment of Liberty Nation's Swamponomics videocast. I'm Andrew Moran, Liberty Nation's economics editor. This week, the banking turmoil that will not go away. According to the latest H4 data from the Eccles Building, the Federal Reserve's Bank Term Funding Program hit another record high for the week ending June 21st. To recall, this was an emergency lending facility backstop established in the wake of the Silicon Valley Bank and Signature Bank failures. The Fed offered loans to banks facing a plethora of challenges in exchange for collateral. Despite the eerie calm that has ventured throughout the banking system as of late, the BTFP continues to record fresh record highs, reaching close to $103 billion. Meanwhile, separate H8 data for the week ending June 14th shows U.S. consumer banks witnessed a $17 billion decline in outflows on a seasonally adjusted basis. Of course, this was offset by a $32.2 billion inflow for large foreign institutions. Still, domestic banks are continuing to watch a steady decline in deposits, which has been true not only since the collapse of SVB, but also over the past year. Fresh data reveal that commercial banks are apprehensive about approving commercial and industrial loans as they have been on a downward trajectory since March. Indeed, this all coincides with the latest M2 money supply data. The latest numbers show that the nation's money supply has contracted for the fifth consecutive month, tumbling nearly 5% in April. Overall, all of these developments will lead to the same path: banks tightening their lending standards. At least, this is what the latest Senior Loan Officer Opinion Survey, or SLOOS, shows. While the big banks are not too concerned, the smaller outfits are keeping their vaults closed and their drawers shut as they face greater scrutiny and grapple with various threats, particularly commercial real estate, which is mostly concentrated in the smaller banks, something that Fed Chair Jerome Powell recently confirmed in a semi-annual testimony in front of Congress. Consider what the May SLOOS report revealed. Quote, banks reported expecting to tightening standards across all loan categories. Banks most frequently cited an expected deterioration in the credit quality of the loan portfolios and in customers' collateral values, a reduction of risk tolerance, and concerns about bank funding costs, bank liquidity position, and deposit outflows as reasons for expecting to tighten lending standards over the rest of 2023. Even if banks wanted to lend, there is diminishing demand amid higher interest rates and economic uncertainty, particularly for commercial and industrial loans, the bread and butter for smaller lenders. This is only the beginning too. Remember, the effects of monetary policy changes, especially as it relates to interest rates, is not felt for up to 24 months. So, even though the Fed brought the benchmark Fed fund rate to 5% at a recent meeting, the economy is still wrestling with interest rates in the 2 or 3% range. Perhaps this explains why Treasury Secretary Janet Yellen keeps insisting that there will be more bank mergers later this year. The smaller institutions maybe cannot handle this environment of a shrinking money supply, higher interest rates, and elevated inflation. So, the power players who are flush with capital and liquidity will be more than happy to intervene, buy these banks out, and receive thank you notes from the White House and the Federal Reserve, and be given a round of applause from Republican and Democratic lawmakers. In the end, the Wall Street Titans will enjoy their entry of the gods into Valhalla. That's it for this week. Please read my full Swamponomics column on the pages of LibertyNation.com, where I discuss the U.S. manufacturing sector in a recession, UK inflation, and the coming global central bank digital currency, or CBDC. Thank you.
Don't get caught up in the media madness. Join our movement for free thinking and free speech at LibertyNation.com. Publishing news and analysis 24/7 with original articles by our team of authors who tell it like it is. Join us each week for online TV shows, The Uprising Podcast, and Liberty Nation Radio. We believe in free thinking and free speech. We are LibertyNation.com.
I'm Andrew Moran, Liberty Nation's economics editor.
Very, very rocky.
Death by government.
Drain the swamp.